and it's been such an engaging session for business observers. All that has happened through the day, a good budget, the Adani chaos, and then now later tonight we are heading into the FOMC meeting. It's been such an engrossing session. I have with me now the CII President Sanjeev Bajaj to talk about the budget, and in a few minutes I'll be joined by Nikhil Kamath, that's once we are through with Sanjeev, Nikhil Kamath of Zerodha to talk about the other issues which affected the market as well today, along with the budget proposals. Sanjeev, thank you for joining in. My first question to you is something which all the guests in the show have been talking about, that the government is continuing with its relentless thrust on on capex. 7.5 lakh crores went up to 10 lakh crores today. So when is private sector going to participate in the way or to the extent that the government wants it to participate? When do you see private capex taking off in as big a way as the government capex has been?
Well, then the comforting fact is from the economic survey yesterday, which talks about the revival period for the economy now being complete and we starting to go back to normal growth. Normal growth is just under 7% this year, expected to be between 6 and 6.8% next year. So in a situation like this, as long as demand stays constant, I believe in multiple sectors, we have reached the levels of capacity utilization where you will start seeing new investment. We are starting to see some early movers here, whether it's in sectors to do with construction, steel, whether it's sectors like chemicals, and we expect to see more. It is encouraging to see that the government continues its investment in public sector capex. Again, a big, as you said, a big jump to 10 lakh crore this year. It was a key CII recommendation as well, because this has a multiplier effect on the economy. Not only are we creating new assets, we are creating new jobs, we're putting more money into people's pockets so that they can go and consume, which should get the private sector capex cycle going. So I would say that towards the later part of the new year, you should start seeing some announcements. We know that a number of board discussions are going on to increase capex, and as long as the external environment stays relatively steady, you should be able to hear many more announcements.
You mentioned the reasons why people are getting drawn in now slowly, coming to the table with the improvements in capacity utilization. But if I may ask you, what has been holding back CEOs so far? Because bankers that we speak to, they say that we have started a credit cycle, but it doesn't seem to have that confidence that we saw in the, say, the boom years of 2004 to 2007. What to your mind is holding people back, CEOs back, from doing big ticket investments?
Two very clear things. One is consistency of demand, and the second is uncertainty. And in this case, we know, unfortunately, the uncertainty ends up being mostly global. And that's why I prefaced it by saying that we hope that on the global side, the uncertainty reduces. The war is still on. We don't know when that will end. But the shutdown of China has reversed. And I believe in another couple of quarters, you will start seeing significant growth coming to the global economy because of China opening up, because of revenge buying after years of staying locked. So those are all positive tailwinds to current economic situation. And with the continued investment in public sector capex as well, you should see consistency of demand on the ground. That is what private sector needs, because eventually the private sector capex that goes in requires a certain minimal return. And that's where we are right now.
Both from a CII perspective and from wearing your hat at Bajaj Finance, give us a consumer perspective, because there have been some concessions on taxation slabs today, but a lot of experts seem to believe that's not enough for people to move from the old regime to the new regime, which is a failure from the previous year. I mean, incentives were given, but most people chose not, for various reasons, not to move to the new tax regime. What will the experience be, to your mind, this year? Because on it hinges the fact on whether we'll get a consumption boost from what she announced in the budget today.
So two different things over here to give that consumption boost. One is I was talking to my friends who are tax experts, and what they believe is the lower income segments, right up to the middle class, are likely to move to the new regime because it ends up being beneficial. And above a particular cutoff of maybe 5 crore of income, you will again see people moving to the new regime, because it ends up being beneficial to them. So that's one set of data points. But the second more important thing is people end up spending money, they end up buying when they are a lot more confident about the future. And that's where this budget, in continuation of previous years, continues to create that level of confidence across so many different areas. If you very simplistically look at this budget, it is as much about perform for today as it is about transforming for tomorrow. So the perform for today comes because of cutting the income tax, putting more money in people's pockets, the investment on the capex side, which immediately creates additional jobs, new money on the ground. But it's also about transform for tomorrow. The effort to completely digitize agriculture, improve efficiency and productivity, the additional effort on skilling and to upgrade education so that we are teaching what is relevant for tomorrow. I would say healthcare, 157 new nursing colleges, which will create new jobs and high quality healthcare professionals. The seeds for tomorrow are also being set, and that creates confidence. And when you have confidence, then people end up spending money.